David Morgan in this week's Currency Countdown report. David, it's wonderful to see you. How are you today?
Doing well, thank you.
Well, just so you know, let's start with the European leaders and the bailout of the euro. I am fascinated with this EFSF, or the European Financial Stability Fund. Can you just take us through this, give us an introduction to what they're planning on doing so that we all can understand it, and what you think their chances of success are, because the news is going crazy in the last 24 hours trying to translate it for everyone so they can understand it.
Well, basically, it's centered on Greece right now, and the problems are deeper than that, as we discussed on Currency Countdown a few times. Right now, the market is saying that we're going to take the Greek haircut that they've alluded to in the mainstream press for several weeks ahead of time at about 50%. Interest rates were already going up on Greek debt, so it's not a surprise. The market had already forecast that this was going to take place. So basically, it's an acknowledgement by the powers that be through the Eurozone to say, okay, Greek bonds are now worth about half face value. Is that enough? We don't know. My forecast would be probably not quite enough, but that remains to be seen. Two arguments come to the fore. One is that this is good enough and that things will march on and that we'll get through it and everything's going to be hunky-dory. And, of course, the other side of the equation is a lot of us that think this is a temporary Band-Aid, even though it's good to acknowledge what the true value of that debt is worth, which is step one. 50% may not be the right number. Regardless, you've got Italy, you've got Spain, and you've got Germany, you've got France, you've got all of these intermixes going on, and no one is really sure what's going to happen, say, a few weeks, months, or half a year from now. That's the bigger problem, because even though you have solved the Greek problem on a temporary basis, the overall system is only using borrowed money and leverage to take this problem and quote-unquote solve it. So, Tracy, look, you're leveraging more debt to get out of a debt problem. That actually adds to the problem in the long term.
Okay, so let's talk about the Chinese and their reaction to this announcement. I think I just read a few moments ago that Beijing is saying that they don't want to be the fallout guy to pay the difference, because the initial estimate was $440 billion. They estimated that that didn't account for an additional $300 billion they would need. I think it was $290 billion. And Francis Sarkozy has just come out and said he thinks the amount is going to be closer to $1.4 trillion. Can you talk to me about the Chinese and what the real number may or may not actually be?
Well, no one knows the real number. It keeps increasing. If you just go back 6 months, it was quote-unquote solved back then, and here we are, kicking the can down the road again. And, geez, that solution isn't a solution. We need even more money. I've heard as high as far as in euro terms, $2 trillion. But who knows? The problem, again, is the Chinese know that this is bad debt. It's the old adage, throwing good money after bad. That's how they see it. And they're correct. The problem is the basics, and very few people talk about this. People will say, I'm going to go back to Basel II and lay some foundation. The Basel II agreement was that the best debt that you could own was mortgages and sovereign debt, and that makes sense. Why? Well, mortgage is backed by some real wealth. It's a house, it's a warehouse, it's some kind of permanent real estate. Makes sense if it's valued correctly. And sovereign debt, the belief was that a country cannot go broke. But let's examine the second one. A country cannot go broke. Well, how does a country or a government or a sovereign state get its money? Well, they tax it or they print it. So basically, when a country is upside down, and the Eurozone almost to a country is, you could probably exclude Germany, is that the ability of the citizens to make good on the debt. Well, if they taxed everyone at 100% and that does not cover the debt, obviously you're upside down and it won't work in the long term. And that's where we're at. So people think that government can bail them out or that this bank will take care of the problem. All you have to do is think of it in very simplistic terms, and this is the real way to think about it. If you owe $100,000 and your net worth is $50,000, there's no way you can pay off that debt. Well, okay, someone accepts the $50,000. Now you've taken the old 50% haircut that we've been talking about earlier. Good. But now you're still broke. So this is a very, very difficult problem. And I do not see a good solution coming long term. And that's the problem, because this spills over into other areas.
Oh, wow. So do you think that the Chinese are actually going to come in there and participate? Everyone's betting that they will. Do you think they will?
I do. I think that, relative to the amount of money that they have, it's not that significant a number. For you and I, it certainly would be, but for the amount of cash on hand, so to speak. And they want to play in the global market, so there's all kinds of political pressures that we really don't know, but we can certainly think about and project that are real. And so it's like it is a global problem, and it's like everyone has a vested interest in to keep the system going. The Chinese, as well as the Eurozone, as well as the United States, North America, Canada, everybody. So the problem is that no one wants to stop or see this thing cease or seize up. And yet I still believe, as Mark Farber said yesterday on CNBC, that it's almost inevitable that at some point it will.
So, in addition to the impact of this Euro bailout, the GDP numbers were higher than everyone anticipated today. How do you think that's going to affect the US dollar, David?
Well, the dollar is going down as we speak. Hard to say longer term. Jim Dines is pretty good at forecasting this stuff. And he, for years, has called it, race to the bottom. Everybody's currency is trying to devalue versus everyone else's currency to gain an export advantage. I mean, who would think that you'd want a weak currency? But this is actually what's in the system, because the nation states want to be able to trade, and the best way to trade is to sell your products for less money, so the value of their currency is depreciating. This game can't last forever, and it's definitely causing all kinds of concerns that we discuss, weekly or semi-weekly on your show. Again, at the risk of sounding like I'm, taking this too far, I think you're going to see this. You're going to see it calm into the markets. You're probably going to see the metals maybe back off slightly or go sideways for a while, and happy days are here again. You're going to hear that song for a while, and my guess would be maybe a couple, 3 months at the most. Further than that, what I see is something else erupting. And that I don't know. I can't forecast it, but I do know that the solution doesn't really exist. And there isn't anyone out there that's really willing to tell the people the truth, which is that you guys all owe all this money, and you can't get, blood out of a turnip.
Okay, so let's talk about the yen roller coaster. It's my understanding they're going to participate as well in the Euro bailout. So can you talk to me about what's happening with their value right now? Because it's my understanding that it's starting to increase significantly and a post-war high right now.
Yeah, that's the market speaking, and I'm not ever going to argue with the market, even on a daily basis. I mean, certainly I have different opinions at times. That's how you make money in the markets. Again, everyone is basically gathering together. It's a global problem. Everyone's asked to pony up and put their chips on the table and keep this thing going. And Japanese, of course, are included in that. The Japanese have gone crazy with their problems that they've had in their banking system and their real estate issues, and that preceded the United States by about a decade. They really never came out of it, but here is an opportunity for them to participate in this global currency, you might say, and maybe get some traction with within their system. Am I hopeful toward the Japanese longer term? I don't know. I really think that they have such a tough go because it's basically an island. They have no natural resources. Everything has to be imported. And, of course, the structure of the yen. It might look good for them going up, but, again, what does it do for their exports? It makes them harder to export things because of the value of their currency. So, again, I'm going to see these ebbs and flows taking place again and again and again. And I think longer term it's going to really unravel. You're just going to see more and more volatility, Tracy, in the currencies against each other from here on out.
So, final tip of the week. Do you have a tip for our investors with what's happening this week?
I do. I think, this is something I said way back in the early 2000s. What you really want to look at, from my perspective, is what's needed and what's wanted. So from the 1990s through 2000, the best place you could have been was in the equity markets, especially in high tech. And those days are over. And at the top of the tech sector and the bottom of the commodity sector, I said things will shift on a very long-term basis from things that you want to things that you need. Start looking at commodities, because these are things that you need. You need food, you need lumber, you need water, you need base metals, you need all of this stuff, and that is a long-term mega trend. So keep that in mind. The trend is your friend. The commodity cycle is far from over, and you're going to see more and more pressure in the commodity sector over time. Certainly, we can get a slump here while these currency issues look like they're resolved. Longer term, I bet on commodities.
Well, I agree with you. Any trend that's occurring right now is all of our friend. And I hope you have a wonderful week, and thank you for joining us.
Tracy, always a pleasure. Thank you.